Today is Thursday, May 19th. Happy National Devil's Food Cake Day. Pretty appropriate dessert for what's going on in the market right now. Bad stuff. I want to take a look at things that were good and are no longer good. Here's the Housing Home Building ETF, the ITB ETF. This is just sitting on the edge of a cliff. You can see it's right under its major averages, just sitting on that support. Call it a head and shoulders neckline if you like, but look at the indicators. RSI heading down. On balance volume definitely heading lower, so it's not a good thing. So it was good and now it's not. In a related sector, real estate investment trusts did break out and failed, now again sitting at support. If it breaks down there, that's obviously not going to be a good thing. And this is mortgage REITs, mortgage real estate trusts. And it did break out and it looked pretty good for a while, and then it is now coming back to test that breakout. So it's pretty critical here. It's not bearish yet. So far just a test, so you could actually call it still on the bullish side, but it's got to bounce from here. So that's just real estate related items. Let's look at things that are also related, and this is the real story today. Looking at heavy construction. And here's the Dow Jones Heavy Construction Sector Index. You can see it's not having a good day. Below the 50-day average right now. And if we put a little trend line in there, now there's one broken, a second broken. I'd like to see these things in threes to be a set of fan lines, so that hasn't happened yet. So I'm not heading for the hills just yet on heavy construction, but it certainly does not look good. Look at on balance volume down here. It's given up just about all of the gains from the rally earlier in the year, so it's a bad thing. Some of the stocks within the sector, Chicago Bridge, there's a breakdown. Draw that little trend line. So that's a preliminary breakdown. Notice how it's below both moving averages, failed at the 200-day, and it's now attempting to break down below the 50-day. Not a good thing. EME, honestly, I don't even know what the name of this company is. Breakdown, support break, 50-day average break, 200-day average break. All the indicators heading lower, looking pretty weak. Of course, very short-term oversold right now, but not a good sign for the sector. Jacobs, next. This one is the bright spot in the group. So there's always something that's doing okay. But look how high that is. With the rest of the sector getting killed, I don't know if I'd really want to jump into something that's sticking out alone. KBR is next. I don't have to draw any lines on that. It just looks pretty weak. And Fluor, again, look at that. Gap down through the 50-day. Indicators are weak. So let's just recap here. We got home building, real estate investment trusts, mortgage real estate trusts. We have the heavy construction sector. All real estate related, and some of them were good and now they're not, and construction really just looks like it's taking it on the chin. So just another sign that the economy is not doing what they say it's doing. We looked at a lot of retail this week. Today, some fireworks to the upside with Walmart, but overall retail's not doing well. And now we have real estate and construction not doing well. These are economic signposts, and they don't look good right now.